The state of the retail market here in the state of Florida continues to be something that is morphing and evolving. There is a low supply, high demand, flight to quality assets. Vacancy rates continue to be low, rents continue to climb, and this is most certainly a landlord's market, especially on the west coast of Florida. There's a low supply of quality retail product. Rents are increasing. It's not uncommon to see rents increase. Sometimes a lease that was signed 10 years ago, 5 to 10 years ago, comes up for renewal, and you're seeing a 50% increase on the rental rate because the market has changed so much over the last 5 to 10 years. It's really a landlord's market at this time. Well-located retail space is hard to come by. The interest rate environment is something that's very interesting at this point in time. Obviously, with what the Fed is doing, they've risen rates over the federal funds rate over the last 18 months more or less, and at this point they're kind of taking a pause, a wait and see approach. The interest rate environment, this is the new normal. This is the new normal. It's not going to change drastically anytime soon. There's expectations that the Fed will lower rates at some point in the future. When that will be, we do not know. They were possibly considering it in March. Now it looks more like the middle of summer. So it's very common in a commercial real estate loan to purchase a retail property that you see plus or minus 7% interest rate. That will most likely be the case for the foreseeable future. Banks are being very selective on the types of deals that they loan on. Typical LTV is roughly 50 to 60% on an unanchored strip center here at this point in time. And again, that's if you can get the loan. They're working with borrowers that they have a track record with, that are proven, and that they have a relationship with. So this is definitely an interesting market. The back this year has been slow on volume. Transactions have been down significantly, and as we go into 2024, we expect in March and April you're going to start seeing more assets come to market as the financing world kind of settles down. Buyers and sellers are still at a disconnect. Sellers want high pricing, buyers want to purchase low because the value of their cash is more now than it was in the past. And so you're seeing the bid-ask spread still be dislocated. However, sellers are slowly getting closer to buyers' bids, and we expect this to get better over the course of 2024. But we do expect more inventory in March and April and more transaction volumes throughout the remainder of this year.